Hello, everyone. Welcome back to another episode of The Money Lane, Pitt, Ohio's financial wellness podcast for all of the employees of the Pitt, Ohio Transportation Group. My name is Chad Warnbein. My dad, Keith Warnbein, is with us today as well. The goal of the Pitt, Ohio financial wellness podcast, The Money Lane, is always to deliver timely guidance on financial planning and employee benefits, and that's to help everyone out there, employees of the Pitt, Ohio Transportation Group, make confident financial decisions. Today I consider it to be like episode 6, but one of our many episodes now. We are live on the Pitt, Ohio YouTube channel for you to check out. So please do that. We've covered a variety of topics: rainy day fund beneficiaries. What else? Market update. Our latest one was on voluntary benefits, all the Pitt, Ohio voluntary benefits. So check out the Money Lane on Pitt, Ohio's YouTube page, which this episode will be up there hopefully in the next week. Today's June 2nd, 2026. And we wanted to put this episode together for a very timely reason. We do have a special guest with us today, not in the studio. It's our first time having a virtual guest on the Money Lane. So we're excited about that. Thank you to Jackie, Candy, and Keith who are in the room with us. Thank you guys. I'm going to introduce real quick. Any comments on the Money Lane so far, Dad?
The only one you forgot, I think, was a retirement roadmap. And we just told an employee about it. Go out and check it out. It's very helpful.
Awesome. Yeah. We've been having a lot of talks over the past couple of weeks, not only in the market, right? It's been an interesting year in the market so far. Like I said, as we sit here on June 2nd, and one of those discussions was revolving around SpaceX, right? Elon Musk seems to be in the news all the time, fortunately or unfortunately. We're not going to talk about that, but the main reason that SpaceX has been in the news is because IPOs, initial public offering of a company's stock. Our special guest today is a friend of, I would say, the program, the new program, John Davi. He is joining us virtually from New York City, but John is the president and founder, chief investment officer of Astoria Portfolio Advisors. You might be sitting there saying, who the heck is Astoria Portfolio Advisors? Who is John Davi? But John is the president, like I said, of Astoria. They're a registered asset management company headquartered in New York City, founded in 2017. So, John, thanks for joining us today. How's everything in New York City?
Great. It's great to be here. We're very excited. We got the New York Knicks in the finals. So,
Good luck. But John, I'm going to give him a little kudos here. He's a frequent contributor of Barron's, Wall Street Journal. I believe 2 weeks ago, you were on CNBC during the day. So frequent contributor of CNBC. So John, give us a little background on your experience, where you came from, founding of Astoria. So everybody out there here, Pitt, Ohio, knows who you are, where you came from.
sure. Yeah. So I started working on Wall Street in 1999 in the Merrill Lynch Equity Derivative Research Group. In the late 90s, research was a very prominent space and role. At the time, there was a lot of euphoria in the stock market like it is today. Back then, they said the internet was going to change the world, which it did. Today, they're saying AI is going to change the world, which, I'm sure it will. But there's a very interesting parallel between when I started in 1999 versus today, which I hope to talk about. So I spent 20 years between Merrill Lynch and Morgan Stanley. And then 8 years ago, I decided to start an asset management company that would take the principles that I learned at, the big sell side firms working for institutional investors. And I wanted to apply those principles to financial advisors for their end clients.
That's awesome. And
So
John,
we have,
I talk to you and your team essentially every day. So John helps us on the outside of the Pitt, Ohio plan managed client investments. So I lean on him and his team daily, right?
Yeah,
For market.
you should say what John Davi means to us in our practice. So our practice is two sides of the fence. Basically, we have the retirement side, the 401ks and cash balance plans that we run, but we also run individual portfolios for people that are trying to grow their wealth, but also to try and preserve their wealth in retirement. So one thing that Chad and I do is work with John and his team through the Charles Schwab company to set up IRAs. Schwab becomes the custodian, and John and his gang, they run the investment. So it's been working really well. As our chief investment officer, one that we look to, and couldn't be happier. Things are going very well. So I'll turn it back over.
So I'm
to you.
always talking to you and the team about what's going on in the market. So sorry to interrupt there. What else were you going to say?
No, it's I think that it's a good kind of way to think about, SpaceX with regards to like, is it really going to kind of change the investment world? The price you pay for an asset, your entry price is very, very important. I come from Queens, New York, where, I've seen real estate go up, 30 times. My parents bought a two-family house in Astoria, Queens for, 50,000, and it's literally gone up like 50 times. But the price you pay is important, right? If you try and buy real estate now, you may not get the same return. So I'm really fascinated to talk about SpaceX because there's so much euphoria out there. But I do want to make a point that it's priced so high now, and we really have to be careful.
All right, you're jumping ahead of me. That's okay though. Real quick, and the reason why I wanted to come up with we came up with this podcast idea was a couple weeks ago. I talked to maybe, the 15th or 20th person asked me about what I thought about SpaceX, and I said, quite frankly, that's not my expertise. That's John and his team. So I said, why don't I get on an expert to talk about it? So before we go into that, real quick, stock market update overall, right? So I have some stats, and I want to ask your thoughts. But the S&P year to date, as of June 2nd, the S&P 500 is up 10%. The Dow Jones is up over 5%. And then the NASDAQ exchange, NASDAQ indice is up 16%. So it's been a crazy market year to date. We're 5 months into the second quarter now. But give me quickly 3 to 5 minutes, maybe a little bit update on the market, where we are now, right, and what you see for the rest of the year, maybe into next year.
Okay. First thing I would say is like, we have sort of like these rules and principles of how we think about investing, which is generally, measured in terms of like, how well the economy is doing, how well corporate earnings doing, right? If a stock produces, more earnings, free cash flow, it has good margins, we think that the market will generally reward it. We don't like look at like, okay, Iran, Iraq, this war and these sort of like politics, it's just not like what drives like the stock market. I mean, short term for sure, but we were pretty vocal early in the year that we thought it'd be a pretty good year for the stock market because we had a pretty significant reduction in tariffs from the U.S. administration. We thought that we would have a good earnings season, which we're coming off like a record earnings season, and then we thought that there would be, I mean, we had the one big beautiful bill which put a significant amount of money into the U.S. economy. So with a very supportive administration and some of these variables, we thought the market would do well. What we did not realize is to the extent that the Iran-Iraq war would sort of short-term derail it, which it did, but just for like a few weeks, 3-4 weeks. As you pointed out, Chad, the market has rebounded pretty significantly. So one thing we advocate for is kind of staying in the market and not overreacting to short-term kind of noise, I would say. So, I think between the fact that, we have a good earnings season, inflation is still, I would say, more of an issue. So I don't think we're going to get interest rate cuts. In fact, there's more of a chance you get rate hikes, or at least one or two. But overall, I would say, the stock market has not only gone up a lot, this year or, since the war kind of concluded or softened. But I mean, we're coming off like, several strong years in the S&P 500. So we're more advocating for diversification to spread your bets out. I started mentioning like 1999 that, there was like euphoria in the marketplace. I mean, people thought the internet stocks were going to change the world,
Yep.
which they did. But, the price you paid, is very, very important. So I see a lot of parallels between the late 90s versus now. It's probably the number one question I get is like, are we in an AI bubble? And, what will cause the bubble to, deflate, let's say. The thing that I would say about the AI, stocks now is that, the valuations are nowhere near where they were in the late 90s. So from that standpoint, I am encouraged. However, I do think that there's a lot of opportunities, in in sectors like industrials and materials and energy stocks, sectors that benefited from high inflation. So, incrementally on the margin, I would say what we advocate for is like trimming some of the U.S. growth stocks that have gone up a lot the last 3 to 5 years, and being much more balanced across, globally, to own real assets, own things like gold, precious metals, and to be, a lot more balanced across fixed income.
Yep. Balanced portfolios. We're going to talk about that actually on our next episode, but have done very well. So investors who've taken in 401ks have done well. So moving into IPOs, right? That seems to be, like I said, the hot topic with what's happening. And it seems like, right, SpaceX is going to become public on June 12th. So we're 10 days out, it looks like, from when it becomes a publicly traded company. So before we talk about that, SpaceX, let's talk about IPOs for a second in your history. In layman's terms, how would you explain an IPO to someone who has never invested before?
Sure. So very simplistically, an IPO is the first time a private company sells shares to the public.
Gotcha. Perfect. That's all we need. And then,
I mean, so the idea, Chad, is like, okay, if you believed that there was going to be a big, opportunity in space, like
Yep.
there's going to be a space economy, you had to be a sovereign wealth fund, a very wealthy family office, or a large institutional manager to sort of like give your money to Musk, and he was going to like take your money and try and like, give you a return on it. And it was a very exclusive audience. An IPO, what effectively does is it says, okay, we're going to take shares and we're going to have it freely trade in the marketplace so that anyone can buy it. So it creates a lot of buzz and a lot of attention, but we have to be very careful when we're thinking about it as an investment.
Right. And, IPOs are a thing before SpaceX, and they will continue to come out, right? It might change the world. We're not sure yet, but we'll see. What's kind of like, in your opinion, the biggest misconceptions that a retail investor has about IPO? Because I think in my mind, everyone thinks, oh, there's this company coming out. We can buy the stock, or we can buy it on Robinhood. I can buy it in my Schwab account that I'm going to make $1 million, right? But what are the kind of the misconceptions? Because, we always tell people past performance doesn't guarantee future results. And just because a private company right now says that it's a really good company doesn't mean we don't know that yet, right? So in your mind, what are some of those misconceptions that retail investors have?
Well, number one, I would say is exactly what you just said, is that people think automatically it's a quick, guaranteed profit.
Yep.
That's number one. They think that automatically, they're going to sort of like, if they buy it either at the IPO or, right after it actually opens for trading on the first day, that they're going to buy it, and then it's going to, go up significantly on that day and the day after, and so forth and so forth. And, the evidence suggests otherwise.
Yeah, I was going to say, so looking at the broader market, how do IPOs typically perform against the broader market? Broader market, for an example, use the S&P 500.
S&P.
So how do they compare? If I invest my money in 500 U.S. companies versus an IPO, do you know?
So I would say, okay, you said 500 companies. So you're referring to like the S&P 500 index, which is a very, high quality index of large cap stocks that's been around, since the 1920s. So that index is like the gold standard, right? That's like the benchmark that everyone judges performance against, right? That's the bogey in golf terms. And what I would say is that the average stock, so forget about IPOs, but the average stock generally underperforms the S&P 500 index. The idea is that like over the course of the life cycle of a company, management could change, competitors could come in, and all of a sudden like the stock prospects change, right? Like let's just take Nike for example, right? When I was growing up, everyone wanted to buy Nikes, right? And now I see more people wearing other shoes and sneakers besides Nike. I would say 10 people in New York, like 6 of them are wearing non-Nike sneakers, right? There's all these brands. So things change, right? Even though Nike has like Michael Jordan, like something changed. There was a I don't want to get into politics, which I know Keith talks
Not on
likes
this
to talk
episode.
about.
Not on this episode.
But
Come on.
let's say Nike, started talking about politics, and people don't like that stuff, right? So like, that corporate management, CEO didn't do a good job. Maybe CEOs, a company could have a CEO that doesn't want to work anymore, right? So the point is, like, the average stock usually does not do well, and it underperforms that index, right? So now an IPO, you're talking about something that is a brand new, sort of, investment to the world, right? I mean, yes, SpaceX was operating for some time, and sometimes companies do stay private for a long time.
Right.
Facebook, was private for, I don't know, 10 years. I mean, I used Facebook in college, and, and the IPO, I think, like, like 10 years after I graduated college. So anyway, the point is, like, IPOs are very risky. And the important thing I think people have to be aware of is, like, all those insiders that are working at the company, or the Dutch pension fund, or let's say Elon Musk in the case of SpaceX. Once a company IPOs, they are allowed to sell shares. And I'm not predicting this for SpaceX, but that is probably one of the biggest risks out there, is that, the insiders make so much money because, SpaceX was worth, a small amount at some point in the future. And then, all of a sudden it IPO. So there was an article in Barron this weekend about a family office in Alaska that purchased SpaceX at a $75 billion valuation. And now SpaceX is, projected to be at 1.7 trillion. And, the person was interviewed and said, yeah, I mean, it was an incredible investment, and now, we need liquidity, right?
Yeah.
So, it sort of alluded to the fact that they were gonna, potentially sell their shares, and that could overwhelm the demand. So you have to be really careful. So my experience is that IPOs, generally tend to, sort of, you know, underperform the broad market, with the exception that there's very stock specific circumstances. So now, as a potential investor, you have to think, okay, is this company going to be worth more over time? And there's a lot of risk in that.
I like it. We'll come back to about the CEO question. One more before we talk specifically about SpaceX. Can't be, as technology has changed, obviously. How can an everyday investor responsibly, keyword responsibly, participate in IPO opportunities? What do you think the best way to do that is for
Okay, so
anybody
good
out there
question.
that would
So
want to do this?
yeah, so what's unique about SpaceX is that Elon Musk has, like, a very captive individual investor, ecosystem. And typically IPOs are, more meant for large institutional investors, but he wanted, like, individuals to participate. So, the number is about approximately 30%, of the shares, that'll be available will go direct to retail. So you as an investor have to go to your Schwab, your Fidelity, your Robinhood account, and you have to put, like, your indications of interest that you want a certain amount. And then it's a very, democratic process of how you get awarded those shares. It's a very, sort of non-linear exercise. And my experience with that, Chad, is more people get upset than they don't, unless you're like a big, client of the firm that's running the book. In which case, depending on how much, revenues you pay, you sort of can get more in your allocation or not. So I don't know how the retail custodial brokerages are going to work through that process. But my sense is that most people that want to participate in the IPO will probably be disappointed.
John, is Goldman bringing it to market?
Yeah, I believe their lead left, and there's, like, a number of other firms that are sort of involved. But yeah, I think Goldman's, like, the headline firm.
So
And for the average investor on this call, like, they probably don't have a relationship with Goldman,
right,
so they'd have to go through the Schwab or Fidelity.
right. You stole my thunder. I was going to say the average investor. That's who we're discussing, right? That's the Pitt, Ohio employees. They're not going to have the advantage that the family office in Alaska had, or the clients of Goldman Sachs. So they're going to get it on the back end, and it's going to be a lot different. So
I agree with that.
Moving in a little bit more specifically on SpaceX before we wrap up. So like I said earlier, it looks like, right, June 12th is going to be the IPO date for SpaceX.
Correct.
Overall, why is SpaceX considered one of the most anticipated IPOs ever? And if you believe to be any other ones that were as highly anticipated as SpaceX? Because in
So
my
I
mind,
would say,
sorry, in my mind, it rivals the Facebooks, the Googles, the Amazons, a little bit.
yeah. Well, I have three reasons, but I'll just address that one point first. I mean, those companies you just mentioned were nowhere near the size of the IPO that SpaceX is. I mean,
Right.
this is the largest IPO in history. They're looking to raise $75 billion. But there's three reasons why I think this is like creating so much buzz. First is Elon Musk. He just has like, a reputation, and he's a global, sort of leader. And, he's been very successful throughout his entire life. And he just takes these big concepts like, hey, I'm going to go into payment processing. So he created PayPal. I'm going to give the world electric cars because gasoline is bad for the environment. And, I'm going to have a car run on a battery, right? And, he turns these like concepts into these like astronomical things, right? Obviously he had his, Twitter moment and the government role, but, he's very passionate about the space. And, we could talk about it, but there's not enough power in this country, to sort of empower the AI trade. And
Right.
so, part of the reason of SpaceX is that he wants to build these data centers, in outer space, right? And he's going to use these rockets to kind of build the data centers. So between Elon Musk, one, two, there's like a big space economy that he thinks that is going to be a big business. And then three, SpaceX is really just like a conglomerate of several businesses. You got, a fast growing internet utility in Starlink. You've got the rocket launch business. And now you have XAI, which is his AI tool, that's part of it. Okay. And then there's this concept that, he likely could, sort of put Tesla into SpaceX. And now you have like this, four-legged stool, let's say. So it's a huge opportunity. I think that's why he's commanding this, $1.75 trillion market cap, which, we can get into that, Chad. There's a lot of details, but I mean, that is one of the biggest companies, in the US market. Now, there's only a certain amount of float that's going to come out. Like it's like 3 to 5% on the IPO date. If the stock goes up 30%, they'll put out like another block of, I think it's like, 10%. And then, after like Q2 earnings season, that's like another tranche that'll be like, sort of like free floated out there. So over time, its weight in the index will increase, but a lot of potential, a lot of buzz, also a lot of risk.
A lot of unknowns, right? You were talking a lot of different subjects. And to give him a little bit of credit, he has been pretty successful. People forget about PayPal. I actually just forgot about that until you mentioned it. Why do you think retail investors are so emotionally drawn to SpaceX? And it's probably because of Mr. Musk, but why
Sure.
do you think?
Kind of get rich quick, right?
You know, er, I started my career in 1999, Keith, and there were stocks going up, 1,000% a day in a year. For you to go up 1,000% a year, you got to go up, a lot per day. Early today, the CEO of NVIDIA said that he thought this ticker MRVL could be the next $1 trillion market cap, and that stock is up 25% today on the news. There's a lot of euphoria in the marketplace. Usually strong, economies and bull markets and stocks draw a lot of retail interest. Um, and I would say that, people are attracted to Musk in general, his success, his track record. But, we're living in like this historic, AI super cycle. And this is just another company that plays into that. And it sounds interesting. There's data centers, rocket ships, XAI, his AI tool. So all that wrapped up together is why you have this euphoria. I'm similar to you, Chad. I can't stop fielding questions about SpaceX. So the risk, to my personal opinion, is that a lot of these insiders sell, when their lockup periods, start, and that supply overwhelms demand. So one should be very, very careful. Just to give you an idea, like the NASDAQ index could add SpaceX on day 15, and its weight in the NASDAQ index is like 40 basis points. Okay, so that's relatively small, if I'm being quite honest. So you, as an investor that makes that decision, you should think about that. Like that's the gold standard, right? The QQQs, the NASDAQ index. So, if that's the weight in the index, your weight in your portfolio should be, far less than that, in my opinion. The other thing too, not to drag this point on, but you know, I mentioned I was born and raised in Queens, New York, and my parents bought a house for 50,000, and it's gone up 50 times. That property cannot go up by definition 50 times in the next 5, 10, 20 years, right?
Right.
So I do feel that way with SpaceX too. At a $1.75 trillion market cap, if it were all free float adjusted and its weight would be reflected, it cannot go up as much as some of the other stocks that have gone up a lot. So it's like the law of large numbers.
Do you have anything questions or before we kind of wrap up?
I was hitting all the bases.
Yeah. And we could literally talk about this all day, but to kind of wrap up, John, you don't have to give a recommendation, but kind of overarching theme of IPOs, SpaceX, market in general. What would you finish with?
I've seen the U.S. economy and the U.S. stock market go up. We lived through 9/11. We lived through COVID. I lived through like the great financial crisis where hundreds of banks went bankrupt. Lehman Brothers, Merrill Lynch went belly up. The U.S. stock market vis-a-vis the S&P 500 index, always powers ahead. I think you can have like a well-balanced portfolio with a lot less risk than investing in a speculative IPO. There's a lot of unknowns with, the space economy. I mean, I think planet Earth is pretty good, if I'm being honest. So, I think you could just have like a balanced portfolio, and not take, as much risk as you can, like on an IPO where you're sort of like, you're dealing with like, a lot of unknowns, right? So I think it's a good opportunity to invest in the U.S. stock market, and I would sort of put my bets on that compared to like just very idiosyncratic, risky one-off, stock situations.
I don't know. Did you watch episode 3 of the Money Lane? Because I was talking about the market over the past
Points
100
in
years.
history. Yeah.
Points in history, and I
Right.
don't even think I tipped you off. Did you watch episode 3 yet?
I have it scheduled for this weekend.
Okay, perfect. All right, I was just wondering. I thought you might be the one of
I'll
the
talk to
70
you Monday.
one of the 75 views so far. So get the views of that. But John, I want to thank you. This has been good. I look forward to hopefully doing this again in the future with you, and hopefully everybody out there enjoys this episode. John Davi from Astoria Portfolio Advisors in New York City. Thank you for joining us. And if you have any questions on the SpaceX IPO or anything in the market, give myself or my dad a call. But John, thank you again.
Thanks, John.
Thank you,
It was
Keith. Thank you,
great.
Chad.
And we'll talk to everybody
Thank you.
soon on the next episode. Thank you.